Hello and welcome in today's video. I want to talk about Bitcoin. I want to take a look at the price of Ethereum. We're getting awfully close to an interesting support level in Ethereum. If we take that out, it's probably not going to be good for the price of Ethereum. I also wanted to take a look at CRV. A lot of people requesting me to look at CRV because it had a little bit of a pump. Nothing that broke any structure, but we'll go ahead and take a look at that. And then any of the other ones that you want to take a look at, leave them in the chat, leave them in the comments section. And yeah, we will get to those right away. This is Peer-to-Peer Trades. All right, we will start things off with the price of Bitcoin. Let me just kind of illustrate a point here as to where we are. So we're going to start off on the higher time frames. Let's actually go to the 3-day chart. And let's take a look at momentum here on the 3-day chart using the alphanumerics indicator. If you guys are interested in the alphanumerics indicator, it helps you time your investments. Links below. Yeah, so we're underneath the 7. We're underneath all of the EMAs. The EMAs are in bearish alignment. There's no favorable trading environment for the bulls right now as far as the alphanumerics indicator is concerned. So momentum is still to the bears. Wave is still red. All indicators are showing bearish trend continuation, but I want to take a look at just the highs. So a lot of people, at least in the beginning, struggle with the concept of trend and identifying when a downtrend is in place and when an uptrend is in place. So, you know, I've identified all of the highs here. So we have a series of highs. We have our local high, we have the previous high, the high before that, high before that, high before that, high before that. And all of those prices are marked with the all-time high right here at 68.9. Until we take out one of those highs, we are in a downtrend. There's no ifs, ands, or buts about it. There's no way to, you know, predict a bottom. There's no way to, you know, decide where things become actionable until we take out any high. Any high, we have to take out a high, and we have not taken out a single high. The easiest high for us to take out is going to be our local high. Our local high is at 21,473 here on the BitGet chart. Until we take that out, there's really nothing to get too excited about because the macro downtrend is still in play. We are continuing to make lower highs and lower lows. The trend is your friend until it ends. Don't fight the trend. Don't fight the trend. The trend is your friend. It's something that people need constant reminder of, and a lot of people try to look for things that aren't there and try to, you know, attach a bullish bias based off of fundamentals, based off of tweets, based off of so-and-so buying so-and-so or whatever. It's really that simple, and there's a lot of FUD out there. The only bullish thing that I can point to right now is the amount of FUD that's in the market. That's the only bullish thing that I can look at. Is there is so much fear, there is so much uncertainty, there are so many news articles telling us why we want to go lower that, to me, from a sentiment point of view, that's the only bullish thing that we could be looking at. But sentiment is not a technical indicator. Sentiment is not a technical signal in the for actionable trades. So it's just an observation that, you know, we could be pretty close to a bottom just given the amount of negative sentiment that's out there right now. I do want to drop down to some lower time frames here. Let's go to the 4-hour. Let's make that a little bit bigger. And we've been looking at this pennant. Now, this pennant has been kind of a symmetrical pennant. You know, we're going to kind of observe it like this. So it's been a symmetrical triangle. Symmetrical triangles break in the direction, or they have a heavier bias to break in the direction of the trend. So if it came from a down leg and you print a symmetrical triangle, the assumption is continuation. It's a continuation pattern. When you're in a bull market, a symmetrical triangle out of a breakout is a continuation to the upside. When you're in a bear market, it's continuation to the downside. So, you know, we can look at this. We had our breakdown. We did have an increase in volume here. And now, you know, I'm just going to take away this top trend line here. We're at our bearish retest. So we've fallen out of the symmetrical triangle and we are bearish retesting. So the assumption is continuation of this bearish trend. There's very low demand in the market overall. Crypto is a very, very low demand market right now. The risk, we do not have an appetite for risk in the global markets. When we go ahead and take a look at the S&P 500, the S&P 500 is actually doing just fine. There is still, what this is telling me is there is an appetite for risk for the safer investments, the safer bets. When we compare the S&P 500 against the NASDAQ, where the NASDAQ is traditionally a little bit more of an aggressive index because it's so heavily weighted, well, it's stocks, it's the tech sector, your performance, the comparative performance against both of those indexes is showing that people are a lot more willing to place their bets in the S&P than they are to place it in the tech sector. Tech sector is high risk. Tech sector is seeing a huge washout, a huge unwinding, and cryptocurrency is just the tech sector on leverage. It is even more high risk, and that is why we're seeing just a real lackluster performance in Bitcoin and the rest of crypto overall. Moving things over, shifting the focus over to Ethereum, I don't like this consolidation. This looks very similar to redistribution. We have kind of this seller's climax. Let's actually label some of this right here. We have our seller's climax here, kind of set in the lower end of the range. A little bit of a consolidation into our automatic rally. You might even say the automatic rally is here. Got a little bit of an up thrust, down, up thrust, down, and then another kind of LPS structure, last point of supply, LPSY. Right here. No sign of strength, or sorry, no sign of weakness just yet, but we may get that. We're getting very close to a critical support level right here. If we break below this, take out this low, break below that, we may print a sign of weakness. If we get that sign of weakness, that's your signal to any of the bulls out there. If you've been bullish on Ethereum and buying these support ranges, which, is fair play. We're at a support, you buy support, you sell resistance. But if it breaks down there into that sign of weakness, that's going to be your clear indicator that demand is not there, the bulls can't show up, and it's time to head to some sub $1,000 ETH levels. So not ideal. Let's take a look at what Alphanumerics is saying here on the daily. Clean up all that. Alphanumerics. Let's turn on Alphanumerics. We did have a green wave in Alphanumerics for a bit. That wave has now transitioned back over to red, indicating that the bearish trend and the bearish momentum is still more in favor of the bears. The momentum is just not there. We did get a green diamond here on the daily, but as far as green diamonds are concerned, at this point in the bear market, I want to be purchasing green diamonds on the 3-day and above. Let's actually go ahead and take a look at the 3-day. So we did get a nice green diamond signal here on the 3-day back here. We got a huge rally off of that. Even if you were late to the party, you still managed to get nearly 100% move off of that green diamond. But we don't have a green diamond as of yet here. And we need to hit some lower levels. We need to take out this low at 880 to even entertain a green diamond coming in. So really the low to be concerned about here, which we're very close to taking out, is this low right here at 1,075. Get a break below 1,000, we're probably going to revisit and retest 880. And if we take out 880, we'll be, dancing with lower numbers, possibly even the $500 range that I've been talking about for months and months and months, almost a fucking year. I guess I could say a year now. We've been talking about 13.5 on Bitcoin for well over a year. We've been talking about $500 for well over a year on these assets. So if you are new to this channel, go ahead and follow and subscribe, depending on where you are watching this. Yeah, let's take a look at the DXY. The DXY will kind of shift sentiment a little bit. This is why we're seeing positive sentiment in the indexes, in the S&P and the NASDAQ, because the dollar is falling. We did get a very clear break below the support range here. This is the break below the ice after a huge rally in the dollar, just massive, obscene rally. It's been a good time to be in cash. Everybody says cash is trash. I beg to differ. It's been a fantastic time to be cash heavy and that is coming to an end. We did get our break in structure. We do have our first lower low. We took out this low here at 108, 107, and we got our new low at 105 here as our local sellers climax. I'm thinking that we get a rally. Up to the underside of the ice here. So retest the area of the breakdown and then continue that trajectory down to probably, we'll see if we retest 105 and hold. But if we lose the 105 level, now we have a downtrend. And if we get a downtrend in the dollar, that is actually going to be a favorable trading environment for the S&P, which will bring a risk appetite over to the NASDAQ, which will bring a risk appetite over to Bitcoin and crypto. So if you do see a downtrend in the DXY, we could be at a bottom, at a local bottom, and we could start to favor the bulls in that case. But as it stands right now, this has not happened. So we need to wait and see what happens with that. So a lot of people in a different Discord, we're talking about CRV, curve, pumping. I don't know, big volume signature here, big, like, crazy anomaly. It just goes to show you how illiquid this market is right now. It's just it's just so illiquid that when you have somebody coming in with a sizable position, it shows up as a volume signature like that. It is a good sign that, some whale is interested in buying CRV at these levels. Let's actually go to a higher time frame. Let's go to 3-day. It's actually, man, we are at the lows. We are at the DeFi lows. So CRV launched on the market, made a low at 32 cents, and we nearly hit it. We nearly hit 32 cents. Full retracement for this asset. Man, what a brutal time to be a curve holder. Now, the interesting thing to note about curve is the issuance is very aggressive. That means that a lot of new coins enter the market at a high frequency rate. It's basically an infinite supply of curve tokens. So just because we had a floor back here, the supply of curve was very different back here than what it is over here. So take that into consideration, because a lot of people will be like, oh, we got a double bottom. Yeah, but the supply is way higher. The supply back here was nowhere near as high as what it is back here. So we can actually head lower and you'll get the same market cap as what we had back here. So do be aware of that. Be careful with curve. It's an infinite supply. It's kind of an interesting project that creates yields based off of, I don't know. I'm starting to lose a lot of faith on the whole liquidity pool idea in general. I think that liquidity pools are kind of a band-aid fix to a real problem that is facing cryptocurrency, and that's the fact that we don't have enough transactional throughput to create an actual order book. Every market on the face of the fucking planet, since the existence of a buyer and a seller for thousands of years, we've had buyers and sellers, and they agree upon price based on a bid and an ask. It's always been an order book. It always will be an order book. And I think liquidity pools are just a cheap, garbage, inferior product to, create a marketplace that is false. And it's not a good method for price discovery. So I actually don't like liquidity pools at all, and all of the DeFi applications, pretty much all of them run on liquidity pools. The reason is because they can't process transactions fast enough. Ethereum cannot process transactions fast enough to actually create an order book. So it is technology that I believe will go away as we figure out, more elegant solutions. There's a lot of interesting things, as we've mentioned multiple times here on the channel, with the Lightning Network. Lightning has incredibly fast throughput and infinite scaling. So if we do figure out ways to make it more user-friendly and get some liquidity into Lightning, some robust liquidity into Lightning, we do have the opportunity to create an actual order book, a real decentralized order book. So we'll have to see where we land with that. But as far as curve pump, people talking about a curve pump, there's no fucking curve pump. This is just a reactionary move. People really get this wrong quite a bit. We had a 26% candle here on the daily. You see something go up 26% and you're like, man, it's pumping. yeah, it made a big percentile move, but it has not done anything in regards to structure. No structure has been broken whatsoever. We need to take out this high right here. You need to take out $1. Yeah, we're at 65 cents right now. There's no trend. There's no advantageous market environment for you to be a bull until we get above $1 in curve. Now, if you're a long-term investor, hey, you know, you do you. I don't think curve is a very good investment, but you do you. But from a trader's point of view, this is still a downtrend. So if anything, you are looking for shorts, I would be watching this downward sloping line of resistance up here, see if we can get a rally up into the resistance. If we can, I would be shorting the shit out of this line right here. That's the trade that makes the most sense to me. Now, I say I would be shorting the shit out of it. Let me correct that and say that I'm not shorting anything right now. I do not short things as a rule. I do not short things that have been that have already experienced a 95% retracement. It's not worth it. There's no juice in that fucking lemon. It's done. You're late to shorting, and I'm seeing a lot of people in Twitter talking about shorting the next move, shorting this, shorting that. Guys, the shorts are done. You missed it. Sorry, game over. It's nice that you want to try something new, but you're shorting the bottom of the market. I highly recommend that you do not do that. It doesn't mean that we can't experience a 50% drop, and it doesn't mean that you can't be on the receiving end of a profitable short. It just means that your probability of being correct and your is very low, and your probability of being chopped out of that trade is very high. When the market is one-sided, when everybody's in the same trade, there's a lot of manipulation that can take place. All right. So to kind of recap the TA of that, Bitcoin, bearish test, it's looking like continuation for me. DXY, pay attention to the DXY, because if we can continue this downtrend, if we can take out the 105 low, then we could have a favorable trading environment as far as equities are concerned. That risk on may translate to risk on in crypto later on, but as it stands right now, crypto as a whole is not very exciting. There is very low demand in crypto.